Hey, welcome back to Everything Money. As always, it's Seth, Paul, and Mo bringing you all the breaking financial news and analysis on companies. And today we're looking at AbbVie, Paul. The ticker symbol ABBV. What is today's date? Is it the 6th, 7th? It's September 7th, 2021. We get a lot of requests for this in our community, our Patreon and everythingmoney.com community. AbbVie's a pharmaceutical company of immunology and oncology. They have Humira and Mo. What else are they into? You said there's a drug that they're...
Yeah, so the reason that they dropped so big last week, they dropped like 12% in the middle of the day because they have this drug, Rinvoq. It's a arthritis drug. And what happened was it's a JAK inhibitor. You definitely know about these mechanisms more than me. But the FDA put a warning label on it, and they went up on companies like Lilly, Pfizer, Sanofi, et cetera, that there was causing of blood clots and cancer-related issues and whatnot. So they got slapped with that on their Rinvoq drug, and the stock price got hammered last week. It was down like 13% in the middle of the day.
Mo, I was synthesizing potentially helpful anti-cancer drug. I have no clue about these pharmaceuticals.
I just fell asleep to whatever it is you just said.
Yeah, anyway, Paul, speaking about jacking it, go ahead, Paul. Tell us about AbbVie and your thoughts on this company. Paul, Gabriel is your name, I think.
Yeah, so Mo and I both have oncologists as fathers. I've not talked to my father about AbbVie. Have you?
Yeah, I have.
Talked to my father or your father?
Both.
What did they say?
They have a good pipeline. Their biggest concern is their drug Humira, which is a blood thinner, and it's coming off patent pretty soon. And it's a very big driver of revenue for them.
Yeah, I mean, we notice the commercials are always like, hey, talk to your doctor about Humira.
Yep.
Okay, so AbbVie is almost...
Also, they have biosimilars going after their Humira, so that's also really bad.
Yes.
Yeah.
What percentage of their revenue is Humira? Can you look that up?
Sure.
Okay, so market cap, $193 billion.
Wow.
5-year PE of 31. That's an X. We want it lower than 22.5. Healthy profit margin, which isn't a pillar anymore. Look at this dividend yield, by the way.
4.3.
Yeah, 4.3%. They can afford it. Their 5-year average is 12.2, so it's about 2/3 of their 5-year average free cash flow.
Our pillar number 2 is 5-year return on invested capital greater than 9%, Paul.
It's 10%. That's a check mark. So we have 1X on the PE, but a check mark on the 5-year invested capital. And by the way, drug companies tend to have a very high return on invested capital. They tend to. So that's a good thing.
Pillar number 3 is revenue growth over the past 5 years. I assume they're doing well.
They've doubled, 26.7 to 54.
Wow,
now, I imagine it's a drug company. There's probably been some acquisitions along the way. Mm-hmm. That is my guess. They probably acquired some companies. You can look at that in the cash flow statement.
Yep, they recently acquired Allergan, several new drugs in aesthetics and women's health. Paul, you're absolutely correct.
Okay. Now, their revenue has doubled. Look at their profit.
Profit growth. Oh, stayed the same.
Stayed the same. Why is that?
Nobody got time for that.
That is strange.
That's very strange. So their revenue doubled. Their profit is the same. Shares outstanding, 1.6 billion to 1.77 billion. That's an X.
Uh-oh.
Okay.
Pillar number 6 is total long-term liabilities, basically their debt divided by 5-year free cash flow.
And their 5-year free cash flow is 12.2 billion. Multiplied by 5 is $61 billion. So we want their long-term liabilities to be under 61 billion.
Okay.
Their long-term liabilities are 107 billion. So that's an X. That's more like 8 to 1.
Uh-oh.
Okay, free cash flow growth. Now here's the good news. Even though their earnings was flat, look at their free cash flow. 6.56 to 17.8. Check mark there.
Wow.
Yeah. So there's probably some write-offs happening along the way that are dropping down their net income. I would focus more on the free cash flow here versus the earnings. Remember, guys, net income earnings can be manipulated much easier than free cash flow. They might have a write-off on an acquisition they did years and years and years ago that when they write it off, there's no actual cash changing hands right now, but there was a write-down of the expense, write-down of the asset, which increases the expense, decreases net income.
I have to ask, why haven't you read the 10K or listened to the most recent conference call on AbbVie yet, Paul?
So that's a great question. People say, you didn't do your due diligence. Yes, guys, I did not. My goal is to use my 8-pillar system to weed out stocks and then decide which ones fit my criteria to go do more research on. If you believe the other way, if you believe you do research first and then find the stocks and then decide about, you are stupid, wasting time, and all you're going to do is convince yourself to buy the stock. That's all you're trying to do. I'm trying to find the stocks that make sense to me financially and then go, why do I not want them?
That's right.
What's the reason why they make sense to me financially? Because most value plays are a value play for a reason, not in a good way. They're mostly cheap because they're a dying business. Something bad's happening there. But the 10 or 20% that are not, that's where you do the more research to figure it out.
Yeah, it's actually rare to be buying a stock. You shouldn't just be.
You shouldn't want to buy everything you see.
That's
it's a very common theme in investment, though. I always find, remember when I buy real estate, there's a reason I don't listen to brokers is they always try to find, well, if you make this assumption, it really makes the deal look good. Well, yeah, but I'm not going to just change my assumptions to make the deal work. I pick the assumptions that make sense, and then I look at the price, go, oh, it works, it doesn't work. In our University of Florida speech by Warren Buffett,
yes.
What did he say? Something I've always said, and it's not because I got it from Buffett. I like to negotiate. Give me a price. If I like it, I pay it. If I don't like it, I don't buy it.
That's true.
That's the way it should be. Determine how much you're willing to pay for the company and for the piece of real estate. See what the ask price is. If it matches, buy it. If it doesn't match in the wrong way where your price is lower than the asking price, don't buy it. If it's the other way around, buy it. That's it.
Pillar number 7 and 8 involve the free cash flow, its growth, and how to come up with a market cap. Paul, go ahead.
So the free cash flow growth we said was a check, 6.6 billion to 17. The average is 12.2 times 20 is $240 billion.
Oh, wow. The actual market cap is 193, Paul.
So it is a check mark there. The question becomes, is that reasonable? We'll put it in the stock analyzer tool. Mo, did you find out what percentage of the revenue?
About 20%.
That's a big jump. That's a big drop, guys.
Big chunk.
And by the way, look at their acquisitions. Remember I said there's probably acquisitions along the way?
Yes.
$40 billion acquisition right here.
Just last year?
Just
this
last year.
Oh, this quarter. Last quarter.
Last quarter.
If you're
well, no, somewhere in the last year between this quarter and the previous quarter last year.
If you're interested in these numbers and this software resonates with you, you can have a piece of this software. You can join our Patreon, Everything Money. You can join everythingmoney.com. Both of you filter into our Discord community of 5,000 people, over 5,000 people, and you get access to the software right now. If you are trying to invest on just buying ticker symbols and hoping they go up in the future, you need to start looking at numbers and think about buying companies. You can do so by having our software, and Paul will tell you about it more in a minute after we get back to Mo. Mo, tell us about, wow, look at this chart. People are in the bid-and-ask nation. People are actively trading this company, and what the hell is going on with this candlestick?
So I like this. So this is one of the Employed Trader Series stocks.
Come on.
So the Employed Trader Series is if you are a working person, you don't have time, I make a video for you, or at least update you in the Discord every single day about 6 stocks. AbbVie's one of them, and how to play that stock that day. So this was the day that big pullback happened where the warning label got slapped on them. And I thought that they were going to turn into a downtrend. They have today. So I'm very excited about this. I'm going to wait 3 days. I'm going to maybe do something with this on Wednesday just to get confirmation that we're going to stay in this downtrend. And then maybe we'll go ahead and go short on this AbbVie stock. But a good lesson about this candle right here. So the stock price went all the way down, and then this long wick means that it pulled back and closed the day right here. So if you were in this for some reason and you got this big pullback, don't panic sell on these things. When you typically have a news events like this, don't just think the world's going to end and the company's going to zero. Look at this thing rebounded almost 50% that day. The following day it was positive. So don't just panic sell when you have crazy events like this. Let things calm down and then go from there.
Remind me to check in with Mo on Wednesday about AbbVie.
Thank you.
Go ahead, Paul. Tell us about our software.
So our software, we created it because our subscribers said, hey, we want software people to do what you're doing. So we made it. It involves a mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive daily content, access to us 3, real estate calculator, stock screener, retirement calculator, Discord community, over 5,300 people you can talk to about investments, anything you want to talk about. It's $27 a month, 87 cents a day. You get all of this, 87 cents per day, less than a crappy cup of coffee, versus $235 a month. You don't get all of it. No brainer. If you take any investing seriously, this will be the best investment you make in yourself. As Warren Buffett says, the best investment you can ever make is in yourself. Keep doing it now. You
will get the stock analyzer tool. This helps you determine what you should be paying for a company like this in terms of stock price. Go ahead, Paul.
So guys, this is a hard one because they're going to lose Humira pretty soon. That's 20% of their revenue. So I'm looking at a 7-year analysis, and I'm going to assume 0% revenue growth on the low end and 4% on the high end, which is way lower than their past 10 years. I'm assuming their big acquisition last year was to kind of make up for the Humira loss of revenue.
Yeah.
Share changes. I made these assumptions. If you want to pause the screen and look at these assumptions are hard. It's a bigger company. I'm going to hit the analyze button, and I thought this was going to happen.
Go ahead.
It's not a good deal right now.
Smidge high.
It's a smidge high. With them losing Humira, I don't know where I want to buy. I mean, My personal opinion is I might add this to my watch list and wait for Humira to fall off and wait for this acquisition to show its true colors. Maybe wait a year or two to see what I'm looking at.
Last October, it was an $80 stock, Paul. It's 109 today. I mean,
and that's after dropping 10, 12% in the last few days.
You're right. It was over 120s.
My opinion is just watch the stock. If you want to trade it, please trade it. But in terms of buying it for value, I just think it's a little bit risky with them losing 20% of Humira. Selling for this frothiness.
No likey.
There's $17 billion in free cash flow last year is only like 11 or 12 to 1 to their market cap.
Yeah.
But I look at it saying they have a lot of debt. They're losing 20% of their revenue. Is that really what you want to be focusing on? I think there's probably better buys out there for other companies.
If we missed something, put it in the comments below, and we can certainly take into account for our next video. And fondle the thumbs up on the way out. Join Everything Money or Patreon to get the software. And we'll see you on our live streams, Mo in the morning at 9 a.m. Eastern. And we go live to the world Tuesdays at 2 p.m. Eastern. Join us, and you can chat with us live. That's our take on AbbVie. Interesting company. We're close, Paul. We just need a big fall here to get in our wheelhouse.
Correct.
So that's our take.
We're close. We just need a big fall.
That's right. Well, that's every stock, right?
Yeah,
The stock market.
The whole stock market. Yeah, we just need everything to crash. Then we'll be close on everything. So see you guys.